Hello and welcome to episode 4 of Market Secrets investment series, which is on cash flows. If you haven't seen the first 3 episodes, please do watch it and then come back to this video. Also, if you don't want to miss the future videos, you can subscribe to our YouTube channel. So let's get started with the disclaimer. The views expressed in the video are for informational purposes only and do not constitute to be of any investment, legal or taxation advice. They are not indicative of the future market trends nor is to predict the same. Republishing any part of this video will be at your own risk, and we at Market Secrets will not be liable for any consequence of such action. If you would like to know more about us, you can reach us at our website, which is www.marketsecrets.in. So let's begin today's session by understanding few basic terminologies in personal finance. So it's income, expenses, liabilities and assets. So income, which indicates money coming to you. For example, if you work in a job, then you'll get a salary. That's one kind of income. Or if you own a business, you'll get a business income. If you own a property, you'll get a rental income. And if you have any savings, you'll get an interest from those savings. And if you own any stocks, you'll get dividends from those stocks or bonds. So those are the items that falls under the category of income. So that is nothing but money coming to you. And the next class is expenses, which is money that you pay out. So it can be tax, food, rent, transport, apparels or entertainment. You got the point. And the next 2 items are very, very important, which is liabilities and assets. Liabilities are the things that cost you. For example, any kind of loans or even the credit card debts or EMIs, that will fall under liabilities. And asset is the money that works for you. You invest certain portion of money. That money over period of time, it will work and it will generate money on its own. So you don't have to manually put in effort. The money that you have saved will work for you and will put money into your own pocket. That's nothing but asset. For example, stocks. Once you buy some stock and if you hold it, the employees of that particular company will work and they will develop that company, and in turn the stock price will rise. So all you have done here is investing money into stocks. Someone else will be working for you and then they'll make you rich. So this is the simple example of an asset. You should not physically work there. You have to invest and that money should work for you. That is nothing but an asset. There are multiple types of assets. First one is stock, second one is bonds, and the third one is the real estate, which goes up in value in few years. And the fourth one can be small parallel businesses that you are owning, but that is run by someone else. You have to get the difference here. You should own the business, but you should not run it. It's as simple as that. And the next item can be royalties or franchises of your companies that someone else is running and they are paying you out. So these are some example of the assets. So I hope you got the difference. Now let's move on to the next slide. So let's have a look at the cash flow of poor people. When it comes to poor people, they'll get some income and they will spend it on expense. So they might get a salary, they might own a small business, and they'll get the income and they'll spend all that income for their expenses. So they don't have any savings, they don't have any investment. So every month they'll get an income and that will be spent totally on the expenses. Let's move on to the middle class. So when you take middle class, they'll still get the income, but it goes into 2 different directions. First one is for the expenses. Second one is for the liabilities. For example, they might have taken a housing loan and they'll be paying EMI. They might have a credit card debt and they'll be paying interest each month. So you got the picture. Now let's look at the cash flow of rich people. For example, when they get the income from their job, they'll invest that first into some asset. For example, they'll buy stocks, and over a period of time their assets will grow, and once that happens, that asset will generate income every month periodically. For example, if you have invested into stock, you'll get regular dividends. If you consider it as a real estate investment, you'll get rental each and every month, and they will use that particular income from those assets to feed their expenses, and any remaining amount that is available with them will be used and reinvested in the assets. So their assets will continue to grow and they'll continue to feed the expenses. And in addition to that, any income that they receive from their job or business, they'll continue to feed it into assets, making them grow richer and richer in a longer run. So this is what we should try to accomplish. So this is the importance of cash flow. There is a very famous quote from the book Rich Dad, Poor Dad. The way to become rich is very, very simple. You need to understand the difference between assets and liabilities, and you need to buy assets. That is the only rule that you need to understand. Though this quote is very simple, a lot of people don't understand the difference between assets and liabilities, and they end up buying liabilities thinking that they are assets. Example, a bike or a car. Even I'll consider a house as a liability if you don't buy it at the right price. So if you are poor and if you want to be rich, it's always easy to become rich. But if you are in middle class and if you want to become rich, it's always difficult. Why? The only reason is liabilities. So let's go back and check the cash flow of poor and middle class people. So if you look at these two charts, you can easily understand the poor people have only expenses, but middle class people have expenses and liabilities. For example, if you have taken a housing loan, you have to pay for next 20 or 30 years. And that will always going to come back and haunt you because you can't utilize that particular money to create assets. You need to keep on paying the EMI for a certain period of time. So that is why it's always difficult for middle class people to become rich. But as far as poor people are concerned, they can get rich quickly if they plan to buy assets instead of liabilities. To put it simple, assets are the things that puts money in your pocket, and liabilities are the things that takes money out of your own pocket. If you want to become rich, you should buy assets, only assets. So what is the first step? So the first step in personal finance is to understand your cash flow, find and remove all the liabilities as soon as possible, and start buying assets. It can be a very, very small quantity, but it's fine. Start now. It's never too late. So let's do it step by step. So the first step is to start tracking each and every expenses that you do. Maintain a consolidated report for each month. I would want you to do some tracking like this. You need to feed in every single expense of yours, including the yearly expense. For example, if you are going to pay insurance for your car or bike once in a year, then you need to split that amount into 12 months and you have to maintain it. So this expense tracker should track your yearly expense, not your monthly expense. You are doing it month by month, but you need to ensure you are not missing out on any of the expenses that you incur during the whole year. That's the point. And the second thing is you need to start tracking every source of income that you have. Even if it is just a 1 rupee income that is coming in as an interest from your bank, you still need to track it. And the last thing is you need to list down your liabilities. Now, once this is done, you need to create a plan that would bring down your liabilities to nil. But it is difficult if you are going to have a housing loan or a car loan that is stretching across multiple years. But create a plan to do it. That's very, very important. Now, the next step is to create a plan to increase your income from each of those sources. So if it is a very small source, for example, if you're getting 1 rupee a month from a selected source, plan in such a way that it doubles every 3 months. If it is already generating a substantial amount each month, then plan it in such a way that it generates a bit more income each and every month. And the last step is to track expenses for 6 months, at least 6 months, and then sit and analyze. Now separate these expenses into 2 items, which is needs and wants. And you now have to plan and reduce your spendings on the items that fall under wants. This would help you to save more, and you can use those savings to create assets. So you can track it like this. You can track all your income across months, and you can track your individual expenses separately, and you can calculate the overall expenses for that particular month, and you can feed those expenses here, and then you can list down your liabilities and the spending that you have on liabilities. So I have created a small Excel file for you guys. If you want it, you can download and start using it to create and understand your own cash flow. This is very, very important. You don't have to follow the exact same file that I'm giving you. You can customize it. You can add anything that you want. You can remove things that is not applicable for you. You can do all that. But please do maintain a tracker on your cash flow, because that is the first step in personal financing. I hope this video was useful for you. I'll leave the link to download the file in the description section of this video, so please go ahead and do it. If you have any queries or comments, please do post it in the comment section of this video. If you like the video, hit the like button. If you feel it's worthy, please do share it with your friends. Also, please do subscribe to our YouTube channel so that you won't miss any of the future videos. If you want to know more about us, you can visit our website, which is www.marketsecrets.in. If you want to receive daily market updates from us, you can join our Telegram channel, and the link is available in the description section of this video. I thank you once again for watching. Have a great day. Goodbye.